Good afternoon, traders. It's 4:34 p.m. on Thursday, March the 10th. We had a pretty predicted sell-off today. It was really good. This bear flag played out on all the market indexes. Pretty much all four of the indexes are flirting with the 50-day moving averages. We had that bear flag we were watching closely, and it looks like it's really playing out nicely. I hope everyone made a killing today. I certainly did, just because I was ready for it. And it looks like that this next leg is going to be coming sooner than we expected. So now we just have to prepare, and we have to start spending more of our time getting the stocks that we really like together, so when we do finally have this next drop, whether it's to the 11,800 or 11,600 on the Dow, we will be ready to buy hand over fist at cheaply discounted stocks and companies that not only have good fundamentals but strong earning reports with positive forward year outlooks. So today, first thing we're looking at is the Dow Jones, and we finished off at 11,984, finishing down 228 points. That is a massive move on the Dow. Next we have S&P 500 finishing at 1295, below the 1300 psychological level, 24 points, 1.89% down. NASDAQ finishing at 2701, 50 points. 50 points, guys. I can't believe I'm saying this. Wow, that's a big move. Google and Apple were big participants in that down move. The last time I looked, Google was around 10 points down and Apple was 5. I figured something was going on. When you see stocks that are all making 52-week highs start having sharp pullbacks and then having consolidations right under them, that's pretty much a signal that the bulls are tired. They've used a lot of their capital running the market up. Now it's time for the bears to gain a little control, and we're going to trade accordingly. We were waiting for confirmations of breakout or breakdown, and I believe that's what we got today to confirm our thesis. Now looking at the Russell, I highlighted the Russell in red because it was the largest decliner, finishing under 800 psychological level at 2166 points down and over 2.5%. That's a huge move, guys. And then the euro finished down, finishing off at 137.94, about 0.8%. Earnings calendar. Buckle came in this morning and they beat on the top line, reporting $1.05 versus consensus $1, and they managed to finish almost 1% higher on a huge down day. That's pretty strong for a stock like this. Tomorrow we'll be watching this above 37.77 for a long and below 37.77 if you want to get short. I haven't read the full earnings report. I'm just reading the top line and revenue for you guys. So if you like these stocks, you got to do your own research individually on them. Next we have CSIQ reporting. Had a huge miss on the top line, reporting 58 cents compared to consensus 65 cents. That's why a lot of the solar stocks were down today. That's a reason why First Solar sold off 3 points right on the opening 10-minute bar before coming back and rallying a little bit. So that earnings report is a little gloomy for the solars. And you saw after First Solar had just reported back here on the 24th of February, they've gone from 168 to 140, a 28-point decline. First Solar is down over 17% in just a 3-week time span. Next we're looking at symbol EJ, E-House, China. It's a coffee company, and they came in below expectations, reporting 25 cents compared to 28. But they managed to gap it down in the morning session, sold it down to 11.20, and then they rallied it back through 1146, which we have as a pivot, and the opening of the day to get it back above the 50 on the 10-minute time frame, right above closing at 1163, and that's around yesterday's low. So tomorrow, my suggestion would be, if we hold above 1166, I would look to start trying to get long and potentially ride it up to 1208. That's only if the buyers come in, and I set an alert right here around 1172. If they gapped it down around 1146, maybe take a long here and just have your stops tight. If the sellers came in, I'd look to get short below 1146 and use that at pretty much as my gauge in today's open, 1150, about a 5-cent range. JTX, which I thought was going to be a winner coming this tax season, actually fell pretty sharply, reporting 19 cents compared to analysts expecting 31 cents. A lot of the online like TurboTax and stuff has been hurting this company, but it's kind of weird because the first quarter H&R Block blew away earnings, gapping up from 15.22 to 16.44, over $1.20 before finishing up today at 65 cents. So my opinion on JTX is it's just a poorly ran company. Smithfield Foods, symbol SFD, beat expectations, reporting 84 cents compared to 66. And my buddy actually is a plant manager at the office right there outside of Portsmouth, Virginia. It's a big old complex, and they said they've been booming. And I'm sure if you read into this earnings report, you will see the same thing. Actually finished down around 37 cents today. Pre-market, they gapped it all the way up to 23.64 before selling off. It would have been a nice intraday day trade. I didn't catch it, but this might be something you want to look towards if commodity prices continue rising. I know I read something last night on Tyson, and they said that chicken was a laggard in some of their business, but lean hog had been picking up. And I'll post that in the description box if I could find it, that article. Next, we're looking at Aeropostale, symbol ARO. They just reported today after the close. They actually beat by 1 cent, coming in 98 cents versus consensus 97 cents. But they came in here and said same store sales were closed. And remember, AEO, I think that's an American Eagle, they reported it was either Monday or last Friday, and they actually missed as well. So these two names I'm not a big fan of. Abercrombie, you always see people, that store is packed, at least in my area. Even Buckle really surprised me. I know a lot of people that shop there, and in my area that's pretty much a hot spot if you're shopping for clothes on the low end. If you want really extravagant things, you have to go to nicer stores, of course. Alright, I got to run through the rest of these quick. Clean Energy, symbol CLNE, beat, reporting 17 cents compared to 16. And you see they're trading up after hours. NSM came in line with expectations with reporting 24 cents, and that's what they were expecting. Right now we're trading at 13.73, which is around 40 cents down from the close. So investors aren't taking this very well. Tomorrow, if we opened up above 13.73, you might want to look to take a long back up to 14. It's not a big mover, but if you read in this earnings report and you see something good, go ahead and listen to the conference call, guys. I'll get the video out quick, and maybe you could get a little more detail on this. PalCorp, symbol PLL, reports they have not released their number yet, but expectations it's 56 cents. You could look to watch that after you catch the video if you're interested in it. And Smith and Wesson, they were expecting pretty much a flat earnings report, but they came in 8 cents below. You see a huge bar right here. Now they brought it back up to 389. I don't know. I mean, I think that as Congress continues trying to ban our weapons, a lot of people say it will never happen, but so did the Jews during Nazi Germany. And I'm not making a comparison, but they banned their weapons and they thought it would never happen. So if they did get banned and a lot more people started talking about it in the media, I think the stock would start rising because of the demand. Tomorrow's economic calendar at 8:30 a.m. we have February retail sales and retail sales excluding auto for February, and then at 9:55 we have March's Michigan sentiment, and then at 10 a.m. we have January's business inventories. Alright, so now we're looking at the E-mini futures. And I'm pretty excited about this chart. This is pretty much my favorite one. 1343 was the prior high. 1327 was a level that we were using to gauge this market during this whole congestion time. When we hit that 1327 and we saw that big down bar, we were unable to succumb it to move higher and break out of new highs. Then we came to the 1316, which was another key level. They sold it below that, and then 1312 was a major intraday level we saw the bulls and bears fighting at, and we used that to gauge the market over the past 2 days. Then today they got below it, they got below the key 1300 level, and then they sold it, finishing off at 1288.75. Well, 1290 is another key level. We're going to look to keep these two levels in a range for tomorrow's trading session. If we cannot hold above 1290, we will look to start taking shorts, and we will start heading towards our targets, 1280, then at 1275, and then eventually down to 1255. Honestly, this is healthy for the markets to see some kind of decline. What I would like to see, and you don't always get what you want, but if we came down to 1220, that would be very, very superior to what would then happen, because a lot of money will be put back into the market, and I believe that that's the one dip that everyone's looking for to get back in, and that you see all these managers talking about. And there's been some problems in the bond markets lately. That's not my expertise, but it's pretty devastating things, because one of the leading bond managers in the nation was selling a lot of their debt, and that's not a good sign. So right now, you know where I stand on the markets. Still bearish. You got the levels for tomorrow. And remember, guys, just like the S&P 500, the Russell 2000 index has a key level too, and that's 800. And we got a sell below 800 today, so a confirmation that the bears have control when it's under the 50. You know, on all time frames, this is the main moving average, and like I told you guys time and time again, if I could only have one average on my charts, it would be the 50. And below 800, we look to sell, and above 800, we look to get long, and maybe play it up to 810. But what I've been saying over the past couple weeks is if we can't break above 830, you're going to see a range between 800 and 830. And then when you're breaking out of the range, that's when the bigger moves come. And we'd like to see a move back down to 750. That would be ideal. So anyways, I'm wrapping this up, guys. This is my strategy. This is what I use. Everyone uses different things, but this works for me. It's whatever works for you. If you're comfortable with something and you're making money using it, stick with it. Don't change your mind. The grass isn't always greener on the other side. Alright guys, good luck trading tomorrow. It's Friday. There's going to be a lot of volume.